The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman here in our desire to get to you, to give you as much information as we can, to give you perspectives of the market every single market day. It is my pleasure to be delivering this from Logan Airport, snowbound Logan Airport, Boston, and about to take off in an hour and a half. And I just wanted to get this done because it's such an important period. And of course, I want to thank everyone for getting their shows together before this. And what is today? Today's Tuesday. Options Hour coming up straight after this. So let's just go straight to our story. And the most important thing about the story is this, that based on the Chapman methodology, it would be rare, very unusual, not to get those higher peaks in the weekly chart before pulling back even sharper. So as I'm looking at this right now, you've got the E-mini futures up 7 at 2060. Let me just read you the numbers if I can actually see them. Yep, the Dow is up 56 at 17,767. The S&P is up 8. Yep, up 8 at 2,054. The comp index is up 25 at 4751. The VIX is now down. It's a 17.91. Very good. Now, this is going to be very important to me. What we're looking at here is that early morning spike. It was so interesting. I was looking at the charts this morning at about 6:37 in between all that snow blowing. And what I decided was that I would send out to my subscribers a buy the Dow, one of the instruments that we'd be using, right there and there. Well, I looked away for a second, and the next thing I know, the S&P futures are up 8, up 12, and I thought, oh, no. And one of the reasons why I want to buy it, in fact, it turns out that we did buy it in the end. We'll see if it's going to be a good move. We've had some success with this before. And one of the reasons is, if I'm correct that the Dow, the S&P, the diamonds, and the SPY should make all-time highs in February, that would say that the downside is somewhat limited. And because the downside is somewhat limited, people carrying the baggage all the way looking across to see what is happening over here. Anyway, if I'm correct, then the downside should be fairly limited. Now, the question is, and I studied this intently over the period of about a week now, if the Greek situation is going to be impactful, there are two things that are going on. One is we have to ask ourselves, during those moments, those lucid moments when the market was acting quite well, were we looking at strength? Was the volatility index pulling back and not really spiking higher? Is this a situation where we're looking at the market as a U.S.-centric market and that the foreign markets are interrupting what should be a stair-step move to the upside? That's what I'm thinking. And to go with this thinking, I've got a webinar coming up a week from Thursday night. Go to the front page of TFNN. I don't know if I can take a risk. I'll take a chance right now. Right there. That's where we should see it. Right there, front page. This is Basil Chapman, the webinar, free newsletter by Basil Chapman. And what's really important about this is that I'm going to be talking about the comparisons between 1929, the market of 28-29, the socio-economic impact of what was going on at that particular period, and the striking similarities right now. Doesn't mean to say that we end like in 1929. No, it's got nothing to do with that at this particular moment. What it has to do with is there enough momentum, is there enough strength to suggest strongly that this market could have a 15 or 12% pullback, but it would still, over a period of time, over the period of 2015, go to higher highs. And at that point, we will be assessing all these other aspects. That's why this period right now, going into next week's webinar, is such an important period. So now let's go back to our story. For my subscribers, what I showed the Dow right here. I showed the Dow And my contention was that there was too little time to get to 18,104 for a new all-time high within the next few days based on that Chapman Wave inside wedge pink dash line target level, unless many factors came together. But what it is saying is that the support, this maroon support at 17,673, it's a moving target within, say, 8 or 10 points, depending where we are. But that area is going to be critical because if there starts to be 2 to 3 closes below that 9-period moving average, it makes the upside, it's really going to take a tremendous amount to get to that upside. So let me just continue with my analysis in terms of the different sectors. So now you've got gold. Gold right now is down about $4. I'm still not seeing anything very much. There are some gold stocks that are holding very well, but as gold is concerned and as silver is concerned, I do not see any real strength. I see actually a little bit more strength in silver, but until silver can break into the 1750s and then very quickly move to the 1770s, I think it's just kind of consolidating that very big gain that it had. The same thing with gold. If you're looking at crude oil is down. It's down $1.89. I think this is the period where crude oil should start to hold support in the 50 to 49s and then have a sudden spike. But that spike, unless that spike gets to the 54.50 to 55.80 area, and it doesn't, I would have to say that if it doesn't do it within the next, today's Tuesday, by Thursday or Friday, that would be a sign of weakness. That would say that that weekly chart of the H going to an M pattern is going to be very, very important. Look at the Qs, the QQQ series. I'm going to get to bonds in a moment, but I just want you to look. The QQQ has held, but it has not broken that downtrend line. One simple little trend line. Look at that. That is part of my work over here. That's not a trend line there. And that's suggesting that the QQQ series trading at 103.57 up 70 cents really has to break the left side high bar of 104.17 that was made on the 6th of February, but that's not good enough. It must get into the 104.60s to show that it has the kind of strength that turns that weekly chart into a cup formation rather than a failure right arm, a right shoulder failure pattern. And here's a 120-minute chart working very nicely today. So now I want to go to the IWM. IWM, which had been at peak D, pulls back today again, but trying to come off the lows. It's the sideways pattern. These are not leadership indices at this particular time. If I go to MDY, and I did get a question, I'm sorry, because I'm working remotely, really remotely at this particular point. I don't want to jump around too much. Everything seems to be working okay. I'm probably going to miss the next commercial if I can't hear it too well, but I'm listening very intently and I'm looking at all my signs. Hopefully my engineer will give me a heads up. But in the meantime, back at the ranch, what I'm really looking at is that the MDY, which is the mid-cap S&P depository receipts, has made a peak E, just like you've got the peak D in the IWM. So we're looking at this and saying, as long as support holds over here, this is kind of good action, but it isn't. Let me put it this way. At 267.39, up 24 cents, that's great. If it starts to break under 264, that's going to be a negative. But if perchance by Thursday or Friday, there's a move into the 269 levels to try to challenge the high that was made just a couple of days ago at 270.31, was it? 270.33. That is going to be very, very good. So it's holding well, but as of now, it's just showing some weakness after a little gap up at the opening. So I wanted to go to bonds. TLT. When we're looking at the TLT, look what happened. I've got here, if I can just change this for a moment, space to the right, let's go 11, let's go 12. Look at this left side, right side price time match, which says that the 129.04 level should be hit by the 20th, I believe it is. Yep, the 20th of February. If that's the case, then what we're looking at is that bonds could be giving some fuel to the general stock market as money comes from bonds, the safety of bonds, into, well, is that the safety of stocks? I'm not sure, but it is a transference. So what I'm going to do is just L, time, please. I don't want to talk over any breaks here. So I'm going to be watching this closely. And then the final thing is that you're looking at not the final, but one of the final things. Looking at the dollar. Oh, there goes the break. All right, we've got a break coming up. I'll be back. Basil Chapman, remotely from Logan Airport. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, Tiger Technicians Hour, live from Logan Airport, Boston. And, of course, there's a lot of traffic getting around, a lot of noise, but I just wanted to do the show. I thought it was very important that we get it out. Why? Because there are so many cross currents right now. Look at the dollar. The dollar is holding very well above the 9-period moving average. It's at 94.64, up 20 cents. The 9-period moving average is at 94.27. Hey, it's working its way higher in this cup formation, but I really have called it a rectangle high-level consolidation. When you put it together with the TLT, look what's happened with the TLT. TLT broke support. It's coming down to a really critical area in the 129 to 128 zone. But the most important thing about the TLT, that's the Lehman 20-year T-bond fund, is that not only has it taken out the daily support level, but it's taken out the weekly support level of the 9-period moving average. But the week isn't not even halfway down. Not even it was Tuesday, just the 1.25 tank at the end, and it's below the 9-period moving average. So we're going to be watching this for bonds and the relationship. Let me just show you something here. Look at the relationship of the weekly 30-year T-bond yield, if I can get it. There it is. Look at that nice V-shaped spike. Well, I shouldn't say nice because the higher yields mean lower bonds. But in the meantime, back to the range, what's really important is it went all the way to 22.26. Now it's at 25.66, so 2.56 is a percentage, the yield that we're looking at this particular time. But look at the V-shaped pattern. So that tells me that if bonds are going to rally because the market is coming back down, we're going to be watching the reals closely because then it shouldn't get into the 27s. It should start to trade back into the 25s very soon. So that's a very important criteria that we're looking at. But I'm going to go to the one that I consider to be most important. And what is that? When we go to the VIX index, the VIX.X, look at this. The Dow is up 51, the S&P is up 8, and the volatility is making a little turnaround to the downside, down 67 at 17.88. But I'm not really looking at the daily as much as I'm looking at the weekly. Let me move the 120 minutes away. I wanted to show you something. Look at this. In the monthly chart and the weekly chart, you've got critical levels to watch. Just very easy. There's nothing intellectually difficult about this. You see a line, it's a black line, it's a 9-period exponential moving average. It's at about, in the weekly chart, it's somewhere around 17.70. The VIX is at 17.87 right now. It's been holding above the 9-period moving average in the weekly chart for most of the intra-week trading, but it's closed below it a number of times. And the monthly chart is walking the 9-period moving average of 16.57. Those are the levels to watch, because if the volatility index starts to decline from minus 0.72 right now to about at 1783, if it goes under 1720, especially if it goes under 17, I can't imagine that this market is not going to push higher. And even though you've got divergences, yes, the New York Stock Exchange is not as strong as the IWM. The IWM is as strong as the S&P. The S&P isn't as strong as the Dow. The Dow isn't as strong as the MDY, which is the mid-caps, which has gone to all-time highs. But look at this. I'm going to introduce you to something that I haven't spoken of for a couple of weeks, actually, although I look at it almost every day. The IYR made a P/D. That's the IYR is the iShares, the Dow Jones U.S. REIT or Real Estate Index Trust. It's trading at 79.56 right now. It is down from its P/D high of 83. What was it? 83. I think it was 83.40 or 50. Moved to 83.54, and that is so it's 4 points. 4 points is really nothing in a $79 or $80 stock, except in this particular index or this particular trust series. What we're looking at is an index that went to all-time highs just recently. It has SPG, that is, it's got Boston Properties, it's got PSA, CCI, AMT, that's the towers. It's just got a whole bunch of very important stocks in it, VNO. And what we're looking at is that if the area that gives you a deal, that is the REIT, the IYR, is starting to pull back together with bonds. The question has to be, are these cyclicals? Why is a Ford doing so well? Well, it's up today in leg D at 15.99, up 7, but it did hit this morning 16.10. Why is GM up at the 36.82 area, having hit 37? Wow, 37.29 this morning. Those are questions. So we've got a break coming up. I'm going to discuss more of this in terms of cyclical, defensive, and defense-type stocks. I'll be right back. That's up in Tiger Technicians Hour from Logan Airport.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, we're back. Basil Chapman, Tiger Technicians Hour. So we were looking at General Motors, and General Motors is in leg B. I have to call this leg B. Everything about it with the stochastic at 88%, the MACD good. Something tells me that the heavy-duty cyclicals, I wonder how X is doing, are doing very, very well right now. The monthly chart is okay, but the weekly chart is very strong, so is the daily. So I'm anticipating that there's leadership here, but it's leadership that most people would not be expecting, not at this time. And wait a minute, let's go to, before I go to X, I'll go to X right now. X is acting very well. Oh, look, it's holding quite nicely there. It's U.S. Steel. But AA, Alcoa, which had been just on a tear to the upside, had two horrible sessions that had capped down. It had an island reversal from the 17.10 PT top that it had, Alcoa. That was the date, was just 3-4 days ago, and I think it must have been the 50th, the 5th of February, and it's trading right now at 1577. That is a big percentage down, but it had a big percentage move up. So it's given back a chunk of that gain. Now, what's really important about this particular phase, I'm going to go to, if I can just remember the name, this is FCAU, I believe that's the Chrysler, Fierce Chrysler. Yes, but there it is. This is the D, E, and it's gone to peak F, and it's holding very nicely in the daily. But is this weekly telling us A, B, C, P, D? Is this telling us that don't be afraid? Chrysler is actually doing extremely well, and in fact, the monthly chart is only in leg B. What? I have to try to put the whole thing together with these disparate areas of in fact, in some cases, they're areas of contention. But right now, you've got the automobiles doing so well. You had AZO, which is the auto parts, screaming to highs that hasn't made an all-time high yet because the 6227.30 AutoZone all-time high that is made back in, I guess it was back in January, first week of January. We're in leg A, B, leg C, doing very nicely, but I'm going to be watching this really closely because normally you'd expect auto parts to slow down as people are buying new cars, new vehicles. But in this particular instance, you've seen AZO and AAP, which is, if I can remember this, it's called Advanced Auto Parts, screaming towards their old highs. And that's telling me that that whole sector is doing very, very well. And how do you put this together? What's going to happen then if yields actually start to climb a lot? I suspect that the yields are going to be in a trading band. They've made the low for this particular period. Now they've got the high of the yields, so I think it's going to be setting up a trading band. And until the market really starts to pull back, which I'm suspecting will be in late February, March, that's when we get our deepest pullback. Those are the things I'm going to be discussing in this webinar that's coming up, the match of the 1929 period. And now, I'm really looking forward to the work I've done for this. Actually, I've gone into areas that I haven't gone into for ages. It's just a really exciting period. And as I say, it doesn't have to conclude the same way, but it's something to be aware of because human nature doesn't change. Skyscrapers denote major tops in the markets, whether it's the Petronas Towers in Malaysia, whether it is the Burj Dubai, which has changed to Burj Khalifa, I think it is. That the very week of its major top. We'll see what happens. Now, this is going to be very important. I want you to go to, just to check it, Amazon, which had been in the tear from its most recent low and gone all the way from the 280s to the 380s. That's a huge move. Not quite 380. I think 370 something was the high just recently. Yeah, 378.80. And it's in a peak C right now, and it should go a little higher, but the MACD is very strong in the stochastics at 93%. So we've suddenly got a change, because before, you remember, going into the late January period, we were not looking at leadership in the big caps, NASDAQ 100s, the price lines, etc. They were not participating on the upside. They were participating on the downside. And now you've got this very nice bounce. Look at this. Dow's now up 17, S&P's up 10, and the composite index is up 34. I like this action. E-minis up 9. Days young. We haven't. I have no clue whether we've had any news on Greece or not, but I'm suspecting that we're really looking at a United States-centric market. And that, to me, would be very important. Why? Because it would say that in this particular period, the leadership is coming from the country that, in fact, has been showing the most leadership for a little while. And we'll see if that's going to really pan out. Now, I wanted to do a couple of other things. GE, we do not own GE at this time. I almost bought GE, and I thought, you know what, I've used it as an indicator lately, much better than using it as buying it and whatever it is. Let's just treat it as an indicator. And it's up 0.01, 0.02 at 24.66. I don't want to see GE go back under 24.23 before we go to, if we're going to go to all-time highs. It's not going to be a good sign. So far, it's acting like it should act. I prefer it was acting a little better, but it's okay. And UTX, my other pilot light indicator, right now is down. It's up. It's up 1 penny at 119.36, and we are actually long that UTX. But UTX is not going to satisfy me until it gets to the 122s. Will it do that at 119.37 with a high just a few days ago of 121.02? I don't know. It's up against very strong left side resistance at the 120.66 area going back a year, over a year actually. This is going to be a very important period. So I'm looking at this and I'm saying EUR, USD, the euro-dollar currency pair, trading right now at 1.130, down a little bit. That pattern, as I said before, now it's so interesting. Had Lou from Nashua call every once in a while, and Lou calls and he wants to know either about the euro-dollar or crude oil or something like that. And I was reluctant to say to him, yes, I think that shorting it here is a good thing. What I said to him is I think from the pattern I'm looking at that there is an H pattern forming, that there is a lot of support in that left side low bar, if I can get to it, right there at 1.126 that was made on the 29th of January. So far, that seems to be the case. And is that telling me that to put it together with the dollar index, which is doing the exact opposite, having a high-level consolidation, what would you call this at the bottom here? A high-level attempt at forming support. So what we're looking at here, I suspect that the dollar is really the trading there, that it might not get much above 95.12. The high, the most recent high that it made was 95.8. What's that now? Don't be slow on me. Come on. Here we go. 95.48. I should type it in so that I've got it. Otherwise, I'm going to keep saying, what was it? 95.48. Well, I think that the 95.20s, 95.30s, I think that's going to be a little bit of a resistance. So we're watching that very closely. And I don't want to say that I'm looking at anything that speaks of tremendous weakness, but I am looking at it, and I am looking at the way that it's formed the rectangle formation. It's very typical for me. I'm going to go to Jerry in the back bay. Jerry, how are you?
Good. How are you? A little snowed in.
Oh, my goodness. What weather, huh? Anyway, yeah. I think I'm all cleared for now. We'll see what happens over the coming week. I hope I don't know if you come back in the middle of a snowstorm. You'd like to look at?
WTI, West Texas crude oil. I think it's such a critical thing for the market. You know. By the way, on General Electric,
yes,
it's impacted by oil.
Yes, it is. And not only that, they went big into the whole area. Boy, they have
exactly.
This guy has such wonderful timing. So. Yes, you're absolutely correct. But you know what? It still manages to give signals, and that's very important. But am I looking at WTI, which is trading at $15.22, down 40 cents?
Yes.
Okay. So that has a very similar, pattern to, I believe it was the USO. Let me just see. USO made in leg B. No.
Well,
USO has not made its leg B. They are different. I know that they have different characteristics. Okay, tell me what you're thinking.
Well, I'm thinking that oil still has another leg down, that the inventories are going to keep building, and so that those picking a bottom are eventually going to get overwhelmed by the inventories that keep building, particularly in March and April, when the seasonal demand slows down sharply.
Oh, correct. So as I'm looking at this now, I'm actually looking at crude oil. I'm trying to get a perspective on all the different grades. So what we're looking at here at 1622, my suspicion is that the weekly chart is starting to form that H pattern that it can become an M pattern. And my contention was recently that if oil is going to rally, it doesn't matter whether it's WTI or just crude oil, or just the regular contract or the continuous that I look at, the pattern speaks to me of the H, lowercase h, that goes to a lowercase m. And that would say that, yes, you could get a rally, but it would only go back to the 1750s, maybe touch 820 over a period of weeks if it was to rally further. But at this particular point, I'm going to have to say that if WTI breaks 550 to 535 key support, there's just no question that it's vulnerable to retest the recent low. But I know this pattern very well in the sense that 480 was the level that we'd be looking at, in that if you've already had a couple of single leg A up spikes that fail and come back down, at some point you're going to make a larger arch formation, and that's really what I'm looking at here. So I don't know whether you see that, but I do see that there's a possibility that if it takes, if it could even get to the $7 area for 622 right now, actually, if it even get to 680, then it has the chance to start making this arch formation. Fairly limited upside, but as you say, it looks, the actual chart looks as if there is a plethora. There is just too much of whatever it is we're looking at. In this case, WTI, I think the market is flooded. That's what it looks like.
Yeah, a lot of technicians have gotten bullish on it, and making new highs and higher lows. And you're not saying all-time highs. You're just saying it should start to make higher highs and higher lows. Oh yeah, no, just a short-term rally.
Yeah, I can see a short-term rally, but it seems to me there's one in the next 2 days. There might be one more little disappointment, and then it should have a stronger rally going into the end of the week or the beginning of next week. And that's the rally that says if the weekly chart is able to close above 645, which is the 9-period moving average, all the way through next week, and that means every single day next week it should not close under 645. It should get to about 660 or more. That will be the very first sign that the weekly chart is building strength, because the MACD has just turned positive. Of course, the week has not finished. It's only just begun. But the stochastic is giving a slightly positive divergence in the weekly chart. So that tells me, yes, I can see some kind of bounce to the upside. And my suspicion is that the 620 to $6 area is actually, sorry, I didn't mean that. I meant the 550 to the $5 area is actually going to hold over the next week. But there is going to be one scary little dip, maybe to test that 540, 550 area. My thinking here is that it might hold.
I see. Yeah, so it's up in the air sort of thing. Yeah.
Well, at this point, I'd be looking at strength if in the next 2 days WTI is able to get to the 685 to 693 area. Then I'd say, okay, now the week is ready for a little bit more of a bounce. I'm just not seeing 9 or 10 coming out of this at this particular point. I might see it later, but the technicals are saying more likely a bounce, keep coming to test. You can make higher lows and slightly higher highs, but all within the space of a high of $7.80 to $8 on the upside, and at this particular point, $5.50, maybe $5 on the downside. So yeah, I see a little bit more bias to the upside, but it's not looking. Today's action is actually very disappointing. The day's, yeah. If by the end of the day it closes more towards 650 than 620, that'll be a positive. But I do see a bounce coming. I think the technicals of the week are saying first time you can see a preparation for a crossover to give you a 3 to 4 week rally in crude oil. And if it's as long as that, then you can expect a test of the $7.80 to $8, maybe $8.20 area. So helps you, Jerry.
Does USO show the same pattern?
The USO has the same, I'm going to call it characteristics rather than the pattern itself. And that is a nice spike off the recent low and successfully not going back towards that recent low. In fact, the USO is looking much better, but it's not acting well. It's just looking much better. And that weekly chart in the USO is not as strong technically as the WTI. And it's so interesting because I never thought of it this way, but looking at it now, I can see the different characteristics in the two tradable. The USO being the United States oil fund, and the TWI, which is your TWI. What do they exactly call it? They call it, well, I hear music.
Okay, thanks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and as would happen when you're doing things remotely, you just never know exactly what's going to happen. And what's happened is that my laptop has just gone black. A battery, of course, wasn't. I charged it, but over the period of time, the battery has not been having such. I thought it would be able to last way more than an hour, but it didn't. So it doesn't matter. We'll do this. If you're looking at the chart, you're looking at my office, my desktop computer, and that's stuck on the WTI. But that's not the issue. The issue right now is that I don't need the charts, because I wanted to talk to you a moment about what we're looking at in terms of the mega bull market that we've had. We've gone from the under 6,500 in the Dow to almost 3 times that amount. And you would expect along the way to have a decent 30% pullback. But we had a 22% pullback at one particular point back, was it 2011 April? And then all corrections have been momentary corrections. They've been rotational. They've been able to go. I just spoke about it a short while ago, that there's a rotation going on right now. There's been distribution in the, I didn't even look at it today, the IBV, there's distribution as that's starting to struggle to make a new high and is starting to show tremendous internal weakness, whereas you're looking at U.S. Steel, for goodness sake, acting quite nicely here. And General Motors, Ford, Chrysler, Fiat Chrysler, that's telling us that there's a rotation once again. You've got distribution on the one hand, maybe it's even distribution in the IYR, the REITs. I don't know. We'll know by the end of the week. We'll see the weekly chart. But what is fascinating to me is that as one sector starts to show distribution, another sector is starting to show accumulation. And I believe that we are looking at accumulation, and that accumulation says that if the big guys, if the Wellingtons, the Pioneer Fund, the facilities, if the really big institutions are starting to get in, if they are starting to get into these particular areas, then what we'd be looking at is a situation that says, we're not talking about 1 month or 2 months. Oh, nice little kids there. Oh, what kitties they are. They look like twins. Nice guy. All right. So if you're looking at that rotational aspect, and if you're looking at big institutions starting to put money to work, they are waiting for sharp pullbacks there to get back into the market in a big way in those particular areas that they probably got out a long time ago or just slowly going back in. And that creepy entry point means that if the stocks that they would like to get into start to move higher, they don't have much of a choice, because what would happen is they have to pay up. They can't pay down. They have to pay up. They're not afraid to pay up. They prefer to pay down. Let me just move a little bit away here so that I can get a little quietness. Hi, guys. And back at the ranch, what we're looking at is a situation that there is a possibility that there is just enough strength to get the Dow to a new all-time high above 18,103, to get the S&P above its all-time high, for it would be the weekly start of HC. Then there's a minor pullback, and then sometime in February, towards the end of the last part of February, we make a leg E in the Dow, and we make a leg D in the S&P. Now, it sounds really weird to be talking about these legs. How do legs dictate so much? I don't know. I've just done it for long enough to know that at some point these things do unfold. I don't know how they do it or why they do it, but that's the nature of the Chapman wave methodology. I'll be talking about that. I'll be talking about the waveform. I'll be talking about what to expect and what to look for. It's going to be a more what you look for, really important webinar coming up Thursday the 19th at 6:30 to 6:30 Eastern Time. It'll be for subscribers only, but don't worry, you can get it. There's a way of getting it. It won't cost you a penny, but in fact, it's a way that it would be, I think, beneficial to you, especially if you have a portfolio, especially if you look at the market, especially if you haven't got into the market yet, or you aren't in nearly enough. So that's the music.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.